Hello everyone, here are the latest market news on December the 3rd, 2020. U.S. bill threatens to exclude Chinese companies. The U.S. House of Representatives has passed a law under which Chinese companies can be kicked off U.S. stock exchange if they do not fully comply with the country's auditing rules, thus providing President Donald Trump with another instrument by which he can threaten Beijing before he leaves office. The House of Representatives took this measure after the Senate unanimously passed the law in May, sending it to Trump, who, according to the White House, should sign the law. Although this applies to companies from any country, the authors of the law intended to target Chinese companies listed in the United States, such as Alibaba, technology firm Pinduoduo Inc, and oil giant PetroChina Co Ltd. Nestle to invest billions of francs in environment. Nestle said Thursday it plans to invest 3.2 billion francs, $3.58 billion over the next 5 years, detailing how it wants to achieve its goal of zero net emissions by 2050. As a first step, the world's largest food company wants to halve its emissions by 2030 and use 100% renewable energy at its 800 facilities around the world by 2025. The Swiss company will work with farmers and suppliers to promote restorative farming practices with the expectation that it will receive more than 14 million tons of ingredients from farmers by 2030. Nestle also said it wants to offset all business trips by 2022 and increase the number of carbon-neutral brands, in particular by expanding the offer of plant products. Dollar fell to over 2-year lows on aid progress. The U.S. dollar to a basket of major world currencies fell to a minimum in 2.5 years on Thursday as investors expect new economic incentives from Washington and the beginning of vaccination against COVID-19, and these two factors can support more risky assets. The dollar to basket index of 6 major currencies fell 0.15% to 90,983. U.S. lawmakers were unable to reach agreement on additional assistance to the pandemic economy, but there are signs that the $908 billion proposal for measures is gaining support. Investors expect that an agreement on aid will eventually be reached. In addition, legislators have little time before December the 11th to approve a $1.4 trillion budget to avoid a suspension of the government. China's service sector shows rapid growth. The growth rate of business activity in China's services sector accelerated in November, indicating a further recovery in consumer demand after the coronavirus pandemic. China's service sector purchasing managers index by Caixin Market rose to 57.8 points in November from 56.8 points in October. The service sector accounts for about 60% of the Chinese economy and employs half of the country's urban population. Service companies increased their staff for the first consecutive month, with the pace of hiring new employees growing significantly. Meanwhile, the level of confidence of the business community has increased to a maximum in almost 10 years.